Okay, so we are joined today by Charlie Burton, who is not just someone who trades for a living, but is also something of a trader celebrity, having featured on the BBC documentary Millions by the Minute. Now, I first met Charlie at a trading conference organised by Simon Campbell of the London Investment Week, who is a mutual friend of ours, and we hit it off. With over 20 years of experience trading financial markets, Charlie has a war story or two, or maybe even three, to tell, like most good traders who ultimately prevail. Unlike many traders, Charlie trades intraday as well as swing trades for a living. Welcome, Charlie.
Thanks, Rob. That's a very kind introduction you've just given me there.
Oh, I think it's earned, quite frankly. I mean, you've been in the saddle for decades.
That sounds bad.
Or 2 decades, should I say.
Yeah, about 20 years, yeah.
So is it true to say that you're simply a natural when it comes to trading, or have you, like us all, endured a journey of many knocks along the way?
No, I don't know if there is anything. I don't know if you can be a natural as such. I think everyone has to spend some time learning learning their way when it comes to trading. But so yeah, of course, I've had plenty of knocks over the years. That's the only way you properly learn, as far as I'm concerned.
Yeah, absolutely. But you are a day trader as well as a swing trader who trades for a living. Now, this is very different to a lot of private traders out there who tend to use trading as a vehicle merely to supplement the more predictable incomes, like their job, for example. Did you find it hard to overcome the pressure of performance in the markets when there are no guarantees and you've got to pay bills and mortgages and things like that?
Well, it's not entirely true. That's that statement. In that. I used to trade for a living. Now, I mean, much like yourself, I have to say that I have my company, Easy Trader, which is a trader education company, a bit like yours.
Yeah.
And so I do derive an income from that. So I have to have full disclosure here that I don't anymore. I did in the past, but I do receive an income from that business. So, but certainly, if we go back to when I went full-time trading, I left the city. I used to work for old mutual fund managers, and so when I left in 2001. Those first few years, you're absolutely right, I had to be self-sustainable. And I do think that there are reasons that helped me to be able to trade for a living at that time. One is I had capital behind me. So I had money in the bank. I think, from what I remember, I had about 2 years worth of living expenses in the bank. So I didn't have to touch my trading capital for the first 2 years. So that took the pressure off, as you've just talked about, pressure of trading for a living, because I knew that all I had to do was focus on trading and building my account without having to worry about taking income out of it. I think another advantage, Rob, was back then I was a young guy without commitments. And there's a massive thing to be said for that. Some people who want to become a full-time trader and with no other income, that is a big pressure, especially when you have maybe a wife and a family and you have other commitments. I didn't have any other commitments other than to make sure I looked after myself. So, and it was probably, I don't know, when I first started taking, I guess Easy Trader actually started in late 2002, but it didn't produce any income. So there was probably no income coming from Easy Trader until maybe 2005 or something like that. But certainly, yes, you're right that it is a pressure. I always say to people, if you want to trade for a living, make sure you have some other source of income if you can, whether it's from property or business or whatever, because it does take the pressure off you. If you've not got to find the money from your trading to pay the bills at the end of the month, then you'll trade better. Naturally, you will just trade better if you're not under too much pressure. So yes, I did that, but it was, one was I was well capitalized. So I wasn't like I had £10,000 in a trading account and I needed to make £20,000 a year from it. That's pressure. When you're trading with larger sums, as you know, Rob, you tend to not be placing as much at risk on every one trade, so that naturally takes the pressure off. And the other thing, like I said, I was a younger guy then. Now I'm 45 now. I was 20 in my mid 20s back then. And I was starting all again now. would I find it a different pressure now? Now I have, other commitments, family and stuff. Yeah, of course I would do.
Well, hopefully that will dissuade some people listening who've got their £2,000, £3,000, £4,000, £6,000 or dollar trading accounts who are thinking of suddenly going full time into trading for a living. Because a lot of people make that mistake. They quit their day job and think, hey, I'm going to be a trader today. And
well, it's sorry to interrupt there. You're absolutely right, and people are undercapitalized too much of the time. I had someone ask me recently. They said they had £2,000 in a trading account, and they wanted to make £20,000 a year from it. That's 1,000% a year. It's just crazy. But people's expectations are wrong. But there's absolutely nothing wrong with someone full-time trading or partially full-time trading with £5,000 or £6,000 in their trading account, provided that is not, they're not trying to create their sole source of income from that £5,000 or £6,000. If they've got another source of income which allows them to sit and trade, then great. But otherwise, no.
Well, a lot of people as well. We certainly have come across a number of clients who have been educated by other people, no names mentioned, who say that they have a monthly target of 10% or something like that. And I think that really does add to the pressure of trading for the sake of trying to attain this target when there is actually no opportunity there to trade. And I think that can be very damaging, actually.
Well, target-driven trading, yes. What it does is it fixates people on an end goal and on an end result, and yet, as you've just said there, you have to, in trading, focus on the process of being a good trader. Someone said to me just the other day, they're now focusing a bit like a hunter. A hunter just end goal is to be a good hunter. Not necessarily what the catch or whatever it might be. And it's the same with trading. You've got to focus on the process. The results will take care of themselves, but not if your focus is on the end result. I always use the analogy of Johnny Wilkinson, the ex-England rugby player. And when he was taking those penalties, he used to have a great hit rate, strike rate, didn't he? And when he was taking those penalties, if he was thinking, okay, about the end result of, I hope the ball goes through the posts, then his focus is not on the process of how he's going to go about kicking that ball. So if he focuses on the whole striking of the ball, where his foot placement is and all the other stuff that goes on, then he's more likely to get the penalty. And it's exactly the same with trading. We have to focus on the process.
I guess there are many kind of allegories through life. I mean, very much like going on a date with a beautiful lady or guy, if you're a lady listening to this. Like, if you're really into them, you've got an emotional attachment to the outcome of the date. And I imagine that's the same. In fact, I know from my experience that it's the same if you pin all your hopes to the outcome of a given setup, for example, in the market.
Yeah, totally agree. And I've been a victim of that over the years several times, that's for sure.
I think we all have. So what does your typical trading day look like, Charlie?
So since you mentioned the Traders Millions by the Minute program.
Yeah, absolutely. You featured
that was filmed in, I think that was early 2014 that was filmed. And there was quite a big milestone that took place in the FX markets a year later, a year after that. And that was this Swiss National Bank crisis, as you know.
Oh, goodness,
and that changed the FX markets to a large extent because of a lot of liquidity was withdrawn after that. Don't get me wrong, they're still great for trading, but they weren't quite the same after that in 2015. So, but I always believe that you have to be able to adapt as a trader. So back in 2014, when that program was filmed, I'd be up in front of my screens around about 7 a.m. First trade could be anywhere around about 7:30. And then I would then take myself off. Once I've got my first trade off, then I would go and get myself ready and I'd often be in the shower with my mobile phone on the side in the shower room, so that I could just keep an eye on what the markets were doing, even whilst trading. And that's how different it was back then, because they would move around quite quickly in the mornings and didn't want to miss out on any moves as on the intraday side of things. But gradually, the markets have changed a little bit. They're a little bit slower now. It's a nice amount of volatility we're seeing so far this year. And so it's a bit different. I don't have to – I'm still up at 6:45 each morning, but I tend to not be in front of my screens until maybe 7:20. And then I'll have a look at the markets. And realistically, I'll make my decision within that first sort of 10 minutes or so of looking at the markets, top-down approach, 4-hour charts, hourly charts, and if I not see anything on those time frames, then I pretty much walk away from it, and then I'll come back to it a bit later. So, but generally speaking, trading day, yes, that first couple of hours through till sort of 9:30 a.m., 10 a.m., then after 10 a.m., I'm really, I'm going to the gym or whatever, walking the dog. So I'm not really doing much after that. And then really from then 1 p.m. through to sort of 3 o'clock or so would be another key period, because obviously we get the US news coming out over that period usually. So I'd usually want to be around over that period. But trading's changed. That's just on the day trading side of things, but obviously I'm swing trading as well. Now, obviously that doesn't require all of that time. But part of the time that I'm sat there, obviously, I'm monitoring what the markets are doing and making other trading decisions based on the much higher time frames as well. I mean, I'll trade right the way out to monthly and quarterly charts on a swing trade. So it's a very, very different thing when it comes to the swing stuff.
So would you say to your clients that's almost like diversifying your portfolio or your exposure to the Forex markets, for example? Like when you're swing trading and intraday trading, it's good to have them both in tandem with each other rather than just focusing on intraday trading.
Exactly, yeah. Diversification is key. So I always say to our intraday traders, we have intraday and swing traders, but our intraday traders, we have a live trading room. So I'll be on a mic with them, chatting with them for a few hours of the day, not all day, but a few hours. And I always say they should make sure that they diversify. You shouldn't pigeon yourself into being one type of trader or another. If you're a day trader, that means you have the time to swing trade as well. If you're a swing trader because you've got a full-time job, then obviously you can't day trade, and that's fine. But those people who have the time to day trade, they should be swing trading. One, for diversification, and two, the skill sets you learn from swing trading, like patience and the likes, are really good for your intraday trading as well.
So almost like symbiotic, if you like. One skill set can influence the other.
Yeah, exactly, yeah.
So in Millions by the Minute, I mean, this was featured by the BBC. You were portrayed as leading a very kind of rigid lifestyle, almost to the point of being OCD. Now, I suspect this was probably exaggerated in order to make good TV. But if it is accurate, Charlie, would you say that this has influenced your trading or your trading edge, or has your trading influenced this?
Yeah, it was exaggerated. Yes, that's right. I mean, they did about 20 odd hours of filming with me, and they seemed to pick out all the times when I was at my most serious.
You seem very serious.
They ignored all the jokes.
Oh,
and
no.
So it's just the way they obviously felt that they would. I mean, don't get me wrong, our house is quite clean and tidy, but not really that OCD. And so they obviously like to create a character, and so they created that character really from the edit. It's amazing if you've done stuff when you do filming like that. It's incredible how editing can make you look different. So, but anyway, that's fine. It was but don't get me wrong, I do think you should have some sort of structure, especially for day trading. If you want to be a day trader, there's no point in being up until midnight each night, drinking and whatever, and then getting up at 6 or 7 o'clock in the morning, because you're probably going to be tired, and your body's not going to be running at optimum. So there are simple things you can do, like making sure you're getting adequate sleep and the likes, just to make sure that you are fresh each day. So simple things like that. But the edge itself comes from you as an individual, doesn't it? And everybody, I believe, is different as a trader. I've met so many successful traders over the years, and there's no one single thing that I think that they all have. I mean, there probably is focus and dedication, of course, but so what I mean is most of those traders all have completely different trading styles. So, and I've met traders who are very different to me. They're the absolute opposite of going to the gym, let's say, every day and keeping fit and healthy, and they're still a great swing traders, at least anyway. So, I'm a believer that anybody can be very good as a trader what you've mentioned there is having an edge. It's a case of each individual finding their edge. But for me, the edge is not a strategy. The edge is sorting your head out and developing a trader mindset. And I know it's a cliche, but it's so important. You can have, I'm a massive believer, you could have the best strategy in the world given to you, presented to you on a plate. And if you haven't developed your trader mindset, you'll never be profitable with it, because as soon as the strategy has a few losers, you'll start second guessing, you'll start hesitating. The next trade you might take and then break your profits too soon. All of those things will happen, and without the right mindset.
Well, it's interesting what you say about blending your trading with something else. I mean, I always find that cathartic experiences, like even just going for a run where you can just kind of get outside your head. Or like you say, I go to the gym pretty often to do just that, have a break from the charts. I mean, there is a disproportionate relationship between success in trading and screen time, chasing those setups. Would you agree?
Well, yeah, actually, I mean, I was just interviewing, fun enough, one of my older students just last week. And he admitted that his first couple of years, he was day trading when he first started. He had this big fear of missing out thing going on. And he would sit there glued to the charts. And of course, if you're sitting there staring at the charts for long enough, you're going to get lured into something. So this is why I always advocate analysis first. And then you trade based on your analysis, rather than sitting there and then watching a market fly off in one direction or another and then trying to jump on board. So, yeah, absolutely. It's not, I don't think it's overly healthy to sit there for 8 hours a day staring at the charts.
No, that's like computer gaming, isn't it? I mean, you remember those Magic Eye books you got in the 90s when you look at a pattern and after a period of time staring, you'd see the pattern, and the markets can be like that. It will lure you in. And if you just take a simple break for 10 minutes and go back to it, the likelihood is you won't see that great setup you thought you saw earlier.
Absolutely. Fun enough, as part of my morning routine, when I'm looking at those markets in that first 10 to 15 minutes, I only trade 5, on an intraday basis, I only trade 5 key major Forex pairs. I don't trade anything more than that. And so I'll flick through each one of those 5 Forex pairs on an hourly chart and 4-hourly chart, and then I start again. And I'll go through that process. Sometimes 5, 6, 7 times. I've already looked at them, but I'll look at them again. And because sometimes your eyes need a break from seeing a certain pattern, and then you come back to it after you've looked at a few other charts, and you might see it slightly differently. And it's the same as what you've just said. Just taking those regular breaks is so important, because you do see things slightly differently. And my analysis for swing trading is very much like that. I don't know what yours is like, but I'll call it, I stalk a market. And so once I've done a piece of analysis on a market, I quite like that market, then I reanalyze over and over again. And then once I've got into the position, then I continue to reanalyze over and over again, because all I'm doing then is reinforcing why I'm in that trade and why I need to hold the position and not bank my profits and all those things. So it's a constant thing, but of looking at the charts, walking away from it, whether that's day trading over 10 minutes, or whether it's with swing trading, you're doing it over days and then coming back to it with fresh eyes.
No, you're absolutely right, and I always find that approach works for my end of day and end of week trading, where do the initial analysis, have some ideas jotted down, then come back to it and develop these ideas, rather than just all doing it at once, because it can be too gung-ho, quite frankly. So your style of trading sounds very systematic, and I do like the sound of it. In fact, a lot of good trading obviously is very systematic in a market which is complete random and chaos. But how did you actually arrive at this specific style of trading, Charlie?
I think that you develop as a trader over the years. One thing that I use is such a simple thing is moving averages, as an example here. So I learned about moving averages probably around about 1999. I'd learned them when I first started trading, but just the basics. So when a moving average crosses, which is not necessarily the most useful information. But so I learned about moving averages as support and resistance zones as well, and in relation to trends. And And so that's certainly been something which has been a mainstay of my trading over the years. So, and then gradually you just build strategies around, using support resistance, whether it's moving average or technical support, or whatever. And a lot of it, how I've developed into where I am today, is just from screen time, really, and noticing recurring patterns. But I also say to people, how I trade today may not be how I trade in 2023. So in 5 years' time, will I be trading exactly the same way as I am now? I very much doubt that, because I am also a believer that if you stick with the exact same sort of pattern or rigidity, that markets, they flow, they're an organic thing. They are constantly moving and adjusting. And if you're too mechanical, then you'll get less left for dust, so to speak. So you have to adapt with the markets as well.
Agreed. And I like what you said about moving averages. I mean, they give us a great indication with regards to the market momentum, and they give us a very objective measure as to whether it's got speed and momentum, driving, say, if you're buying a dip in an upward trend or selling a rally in a downward trend, and of course, dynamic levels of support and resistance. You said you discovered them back in 1999, and it's great attitude to have with the continual kind of learning. But what was the most recent trading epiphany, if you like, that really helped you to improve things? We have them all the time, but what's your most recent?
Oh, God, there's a curveball there. A recent trading epiphany, blimey.
Well, if it's any help, my most recent, I guess, was a few years ago, and that was the art of scaling out. I found just scaling out of a winning position rather than exiting it completely really, really turbocharged the equity curve.
Okay, you just helped me out a lot there. Because actually, my one, in recent years, yes, and I use this more now than I did even 3 years or so ago. I don't know if it was an epiphany, but it's something which if I looked at my trading, if you said, well, what has changed markedly within your trading that you've added in, so to speak, and that would be adding into positions on as a trade becomes profitable, and I see the potential for to hold on to that trade for a substantial period of time, then as it hits new milestones, then I look to build the position. So that would be something that I have added in recent years. Yeah, I didn't used to do that.
Well, adding to positions is quite a powerful method, and we're currently in long on gold on 3 multiple positions since mid-December. So I second you there. It's a fantastic way to really add to a long-term profitable position, providing it's profitable, of course.
Well, yeah, exactly. That's what we're talking about. Not adding in necessarily. That's a different sort of style, adding in on when a market's going down. So to speak. But martingale.
Martingale, yeah, that's right.
But yeah, we're talking about adding in once you're into profit and building the position when it hits certain levels and then maybe pulls back or whatever. But you're getting in, you're already in profit with a core position, and then you're at a point whereby your initial risk is out of the way, and then you can then build the position and add to it. Yeah,
scale out as and when appropriate, I guess.
Yeah.
So, I mean, you trade intraday as well as swing trade, and you've got a very well-established brand, Easy Trader, which undoubtedly has mentored hundreds, if not thousands, of people over the years. Would you say that a lot of people come to you wanting to be intraday traders, but when they get given the reality of it, they soon go for swing trading?
Yeah, well, some do. Yeah, absolutely. I mean, I think certainly some people have a certain view of what sort of trader they want to be before they've even started trading, which is quite interesting. And I don't blame it. It's their own naivety. They don't know any different. They just thought, I want to be a day trader, because they feel that's what you need to be in order to create an income. And it's not necessarily true. But yes, we do get people who come into trading, and once they learn a bit more about themselves as a trader, then they realize, actually, do you know what? I don't want to be sat in front of my screens for, not that you have to be for 8 hours a day, because I'm certainly not, but they don't want to be sat. They realize, actually, I can do this. I could trade off of 4-hour charts, for example, and I then don't have to be pinned to a 5-minute or 2-minute chart or whatever it might be that they might be looking at. And I can have a bit more flexibility in my life. So, yeah, you do get people who, and the biggest thing is, which is one element of day trading, which a lot of people have to overcome, is the psychological element. Because those markets are moving live in front of you, temptation, markets running up and down and tearing in one direction or another, then fear of missing out becomes a big one. Revenge trading becomes a big one. All these things. And some people just look at it and say, do you know what? I'm less emotional when I'm trading off of, higher time frame charts, 4-hour charts, daily charts, weekly charts. And yes, they still have to learn patience and all of those attributes to becoming a swing trader. But some people just find that, you know what, I'm better that way. But I've got traders also who say, do you know what, I'm better at day trading than I'm at swing trading. They find it so difficult holding on to winning trades on swing trades that they prefer maybe the more instant gratification, if you will, that you get from intraday trades. The knowledge that within probably 2 or 3 hours this trade will be over, and as opposed to having to hold on to a swing trade sometimes for weeks and weeks on end.
Agreed. It's a very different set of skills, and certainly in my earlier years, I started trading in 2007, and I certainly started off intraday trading and realised rather quickly that it may not be for me, even though I have got an enormous amount of respect for people that do it. I'm end of day, as everyone kind of knows, who follows the lazy trader, and end of week, even more relaxing.
Well, I think that it's funny. People often just assume that okay, if you're a day trader, they pigeonhole you. But to me, swing trading more and more, and maybe it's just as I'm getting older, that time and quality of life is now more important. I used to trade till 3 o'clock in the morning, Rob, back in the early 2000s.
Wow.
I'd trade, all sorts of hours of the day, and I've paid my dues, so to speak, and I don't need to go there. And anyone who does that, hats off to them. I've done it. I've been there, but these days, quality of life is more important, and so trading off of higher timeframes for me is I get more from that than taking a day trade off of a intraday chart, which I was just in one earlier on with our traders. We were in it for about maybe half an hour or so. I don't get that. Doesn't juice me at all. What I get as an enjoyment from trading is all that analysis that I may have done over a period. Then you get into the trade, and then you run that trade and run it to fulfillment, whatever that fulfillment may be, whether it's trading stop or target based or whatever. But I get much more enjoyment from that, and on the back of that, being able to live and do these other things rather than being glued to screens all day long.
Yeah, I amen to that. Hey, Charlie, I think a lot of people choose trading because they're pursuing the untapped wealth that trading can get them, and it actually turns into a stomach-churning, nail-biting, anxiety-addled experience. And when they find their nirvana, whether it's intraday or end of day, through following systems, life becomes a lot easier. And as you say, lifestyle is everything.
Yeah, it is. I try to, with our traders, they realise that it doesn't have to be nail-biting. And it certainly isn't for me. But it's, for me, what's nice about day trading is I see that as sort of the bread and butter, the keeping the scoreboard ticking over type stuff. And the swing trading is your cream. And so that's how I sort of look at the two. And sometimes I could be having a period with swing trades where they're just not working out, but my day trading might be running quite well, so it can compensate and offset. Comes back to that whole diversification thing. So for me, I do like the day trading, but because it certainly has its uses there, and it keeps that scoreboard ticking over. But it's not the be all and end all. It has to be that blend between both intraday and end of day trading.
Okay, I hear you. So, I mean, you've been around for a long time in terms of your trading as well as educating people for 20 years, which is a lot longer than a lot of people who've taken a few courses and decided to set up shop as like a guru in the market space. But in your learning, in your kind of formative years, can you name any personal book or resource that had a significant influence on your success? Or would it be more down to your own trial and errors?
As far as learning to trade is concerned, most of it came down. What got me into trading is I did go on a course, so that was my first. That I learned some basics, and it was all trading equities back then, US stocks. I remember, I think it took about 3 months to open up a brokerage account back then.
Wow!
and so, as these days you do it online in 5 minutes. No, there was a huge amount of paperwork and everything involved. But so I did go on a course, and it just learned, it was all very, very basic stuff. And I don't think I even got taught anything about risk management, which I learned to my detriment back then. But it is a case of how did I learn, who from, or whatever. Yeah, most of it was self-taught after being on that course, but there were some influences. One influence was, from a book perspective, Market Wizards. Now, there's loads of trading books out there, and lots of people, your listeners, I'm sure, read Market Wizards. But you've asked me what was a big influencer for me, and that was because I so admired the Paul Tudor Joneses and the Eckharts of this world in that book. And everything they had achieved, and the Turtle Traders, Richard Dennis and the likes. And so I love those stories because it was those that gave me the belief that maybe I could do it when I was at that point a terrible trader. Wow. And so losing money, but reading that book, that would be part of the reason why I'm here today, was because reading that book and reading those interviews helped me have the belief to think, okay, they've done it, these guys have done it, and they're all different. Each one of those interviews were different. Some of them were systematic, even back then in the late 80s, as traders, but others were mechanical, but others were very discretionary in their approach. And so what I realized even back then is that there's a place for me. It's not that, you can only be this type of trader or that type of trader. So that's what that book did for me. And I'm actually facing my book cabinet right now, and I'm looking at that Market Wizards book right now because it's still sat there in my book cabinet. So that was a big one. Loads of good books, trading books, psychology books that we could quote, but that one would be the one that really influenced me. As far as any other traders concerned, there was a guy, sadly he passed away a good few years ago now, but it was a guy called David Elliott. He's an American trader, and it was him that I picked up. And I'd never met him, but he used to use moving averages a lot, and it was from him that I sort of learned about the gracefulness of using moving averages as support, resistance, and mean reversion as well. And so I would put part of the sort of way that I trade, like we talked earlier on about moving averages, down to the fact that I sort of picked up on what he was talking about. We were just in like a sort of a semi-chat room at the time, a very crude one, with lots of traders, and I just picked up on what the stuff that he was talking about. But I heard that he died several years ago. He never even knew who I was, but we were just in like a chat room. But yes, that would be it. Moving averages from just another trader and Market Wizards.
Well, I think we all look upon our first reads with great fondness in hindsight as being the kind of turning point of this brave new journey, which is obviously prevailing.
What was yours, by the way?
Oh, Trading in the Zone. I really found that to be a very important read, above and beyond many books on strategy over there, because it really did help hone the psychology of trading.
Exactly.
It's often overlooked, certainly, amongst newbies like myself when I was in it for the money very quickly. Made that classic mistake of chasing riches and placing trades out of frustration, revenge, and anger, that classic kind of like a gambler's roulette wheel, if you like, where the third loss is often the biggest. But Trading in the Zone by Mark Douglas. I was very fortunate to find Larry Passavento, and I've got Julie McCree as a mentor who's mentored me in the past. And I think it's always good to tap into resources, as I'm sure your clients will testify as well as you from your own experience.
Yeah, absolutely. It's I think it probably extended how long it took me to become profitable by doing it by myself, but I didn't know any different back then.
Well, you've had a steep learning curve, and you've certainly built up a very successful brand since then. And so where can people come to find you after listening to this interview? Because I can imagine a lot of people will want to find out more information, Charlie.
Yeah, I mean, they can go to easytrader.com. That's spelled E-Z-E-E, trader.com. And there's a load of information on our site. They can sign up we have a free email which goes out, I think, 2 or 3 days a week. I live trade on the Friday one. So what I do is I record my trading that I'm doing with our traders in our live trading room. I record those trades as I'm taking them on a Friday morning, and then they get sent out as soon as I finish the recordings. And whether it's a winning Friday morning or a losing Friday morning, it goes out, whatever. And I think that over the years, I've been doing that for probably maybe 6 years now, just sending those out. And people really like that because they see, the reality. They see that you don't always make money. You do have losing days and all of this. Doesn't matter who you are. And but anyway, so if people sign up to our free videos, then it's on our site, just on the homepage. Then at least they get some analysis, 1 or 2 analysis videos, and the Friday one. So it's only 2 or 3 videos a week. That would be a great way for people to learn a bit more about who I am and what we do.
Fantastic. So that's easytrader.com. Thank you very much indeed, Charlie. It's been a pleasure talking to you. Thank you for your time.
No, thanks very much. I've really enjoyed it. Thanks very much, Rob, and I look forward to seeing you again at one of the shows.